این خب.
Hi, how are you? Hi, Lonnie. We're here for a lunch and learn. Is this where you guys normally do the lunch one? Okay, perfect. Thank you. I'll be back. Good morning.
Yok güzel de burada geçti. Burada saat daha 11 çeyrek.
Yeah. Attendees, all the food is here. We can go together. She said to lock the door. Yeah, because otherwise. Oops. Good morning.
Good morning.
How are you?
I'm good.
Excellent.
Yeah, beautiful sunny day. How can you be any?
I know. It's supposed to be a fantastic week this week. Thank goodness.
Yeah. I like it when they say things I want to hear.
Don't we all?
Seriously. You know, if we can have this weather
Oh my
until
God.
end of October.
Mhm. Yeah, well, actually, I would like this weather all the time.
Well, so do I,
Yes,
but I'm being
now,
realistic.
yeah.
I put my order in every week, but sometimes they
Me
listen.
too. Nobody's listening and I don't.
That's funny. Yeah.
Or we can go let's just like that last table over the center. Because.
Oh,
Do that, yeah. This table? Yeah, because there's two chairs in there.
we just looked at that. Want to come and help you get the.
Yep.
Because it's two boxes. I didn't, see, if I had known, I would have prepared. Or is it all right to get everything?
Bring this?
Yeah. Yes. Can you just check the line for me, just to make sure? Thank you. Oh, yeah, yeah, you can do that. No, Hi, how are you? Hi, how are you?
Wonderful, thank you.
Talk about the first time buyers.
Yes.
Okay, now I have a question. If a first time buyer is going to go for a house for more than a million, 10% down, CMHC won't touch it. What about lender, P lender?
Yes, you can do B lender, do you require 20%?
Will still be 20%.
Yes, you could, yes, you still would, you still need 20% down. Yeah, we've done it in the case where we'll do a private mortgage behind it. However, but the expensive, we have to pay the issues. So in the liability, whatever the payment is for the private, we have to put it in the liability. And most times it doesn't work.
P lenders, when people 20% down, what about paying the insurance cost?
Hi, how are you?
There is a
I'm good, thank you. How are you? Good. Sure.
No,
CMHC,
no,
no.
no, because 20% is required, right?
Oh, 20%,
Yeah,
yeah.
yeah,
okay.
yeah. There used to be a time where Equitable Bank used to be able to do 85.
I heard somebody, they make good money, they are qualified.
It's sad. Well, we've been lobbying, our mortgage professionals Canada has been lobbying the government. Under a million dollars.
They are making good money. Making very good money.
So I'm actually surprised it wasn't part of this year's election. I'm so surprised that Tatangelo hasn't talked about increasing that $1 million. We have. It needs to work.
First and second.
They can do a first mortgage,
They
right?
go for 10% down. They go for first and second. The first one will be CMHC. That's it.
Not do it, of course. It has to be after the fact. You have to register the second mortgage Over a million, yeah.
Yeah,
Fortunately.
they made good money. They made $500,000.
Yep. I know, it's crazy, but
I learned something new today.
that's, the government rule changes, what are we gonna do, right? It is what it is.
Thanks a lot.
Yeah, no problem.
I'm sitting here, right? I'm like, who's that?
Okay, so, and if, like, jump in. So. Really? So the agenda is. My points. I think I've met you, did you ever go to, Vaughn events with Vivian? Like Mayor's Gala or stuff like that?
Not with her, but in the past I've been for political events.
Yeah, cause I've seen you
Maybe that's
somewhere.
where we know each other, yeah. My dad used to be in politics, so we used to be very involved.
Oh, really?
Yes.
What did your dad do?
He was in Richmond Hill politics. He was the MPP for.
Oh, nice. He's done?
Oh, yeah.
Retired?
He was voted out. He didn't
Oh.
retire. It was a forced retirement.
I'm gonna cover the food. Oh, I did. Just check.
What is that?
So you put it on top of your phone?
I guess.
It's holder.
Oh, like that.
Like that.
Yeah, you can use it as a stand. If you guys wanna start helping yourself for some lunch? Yeah. Okay. I know it's kinda early.
Say, what time do you start?
I'm sorry?
What time?
It starts at 11:30, but, I'm gonna start in 5 minutes. Okay?
In theory, it sounds.
Pues,
Yeah.
so that issue is, so that issue.
Did she send out a reminder this morning? She sent out a reminder? She
No,
didn't.
not this morning.
Oh. Because you told me 25 people were attending. Probably forgot.
There's a reminder yesterday.
There was a reminder yesterday? Okay. Well, I'm gonna get started anyway, and then as they start, they'll start, I guess people will start trickling in.
Unfortunately, this is what happens with realtors.
It's okay. I know. I do a few of these, so I know it's not always the full attendance, but okay. More food for you.
Hi, how are you? Hi, how are you? How are you? Hi, how are you?
Okay, we're gonna get started, and then as people walk in, they can grab a seat. So, welcome. My name is Mary Grace Tatangelo. I'm a mortgage broker, and Begonia is my associate, Begonia Solero. I've been in the mortgage industry since 2008. Actually, 2 months before everything hit the fan in the U.S. So it was an interesting time then, and it is now an interesting time. So I've seen a lot happen in the last 11 years. So we're located in Vaughan, although I do mortgages throughout Ontario. So we're not limited to where we can do mortgages. We can do them right even throughout Canada. Okay, but my actual office location is in Woodbridge. It's in Pine Valley and Highway 7. Hi, welcome.
I'm so sorry to interrupt.
That's okay.
We were supposed to be in here, but unfortunately, Mary can't make it. Is it okay if I interrupt?
Yeah, go ahead. Go ahead. So our agenda of the meeting was supposed to be lending, equity takeout, refinancing and multi-res, and
last minute, we added the first time home buyer incentive, because it just was recently released on September 2nd. So it's a pretty extensive program. I included some literature in your.
Hi, how are you?
Good, you?
Good, thank you.
Oh my God, don't worry about it. Here's your package. So a little thing to know about, if you just go into your package, I included these two documents. So this document is just a program cheat sheet, the basics of what you need to know, okay? So how does this incentive plan work? So it's a shared investment. So what that means is that the government is going to put in 5 or 10% as part of your down payment, which will lower your mortgage amount, and that way you fall into a lower insurance premium category. There are some criteria, so there's ups and downs to this program. It's fairly new. We just did a webinar last week on it. They're in the process. They haven't actually completed an application yet. The first application starts in November. So this is a fairly new program. There'll be a lot of questions along the way, so they don't have all the answers to them. So we'll do the best that we can for now with the information that we're provided. So the program is not, there's no interest bearing on it. It's payable, you can pay it back anytime. So if the government gives you 5% and in 3 years you want to pay that money back to the government, you can. However, the government will require a full appraisal on the property to get the fair market value at that time. So what that means is if you purchase for $400,000 and they gave you $20,000 or $25,000, but now 3 years later you want to pay that back, and now your house is worth $500,000, then it's the 5% of the new value, which is $500,000. So yeah, yeah. So either way, they can either pay it back in full prior to the 25 years, or it can go all the way to 25 years or before the property sells. Yeah.
So let's say the buyer says, my house is going down to 300,000. So I'll pay it back on the basis of 300,000.
They can do that. That if you read the program, it's both up, whether it's upside or downside. So it's 5% of whatever the market value is.
So the government wouldn't necessarily come back to them if they stay in the house and now it's worth 600,000.
No.
And they go to sell.
No. So actually, one of the topics that came up in one of our discussions was, a lot of people are buying these properties where they want to renovate. Well, it's recommended that before you renovate and you spend the money on upgrading your property, pay out the government and then do it, and then do a refinance, because otherwise your value can go up substantially and then you're paying 5% of that new value. So it's actually recommended from them to do that way.
Well, thank you for that.
Yeah.
Say you buy a house with this program, 3 years down the road you want to sell it, but before you put it on the market, you pay off the government with the old price.
No, it's whatever. So like as soon as you trigger that you want to pay it back, the insurer, which is Canada Guarantee or CMHC, they will order an appraisal on the property at the cost of the client, and they will find out what the fair market value is. So yeah, it's the government, come on. they need to get their money. Also about the 5% or 10%, it is repayable in full. So you can't do a partial payment, it has to be paid in full. There's no penalties to pay it back. You can pay it back at any time, but if you decide you want to pay it, it has to be the full amount that's been given to you, okay? So who's eligible for this type of program? So it's someone that's never purchased a home before, or who hasn't occupied a home in 4 years, okay? And that's one title to it. Or who has gone through a marriage breakup. In that case, they'll consider it. So I don't know if you know, but CMHC, Canada Guarantee, and Genworth, as of today, and it's always been, if you're going through a spousal separation, you can actually refinance your home up to 95% of the value of the home as of today, to buy out your partner. So it's a specific program called a spousal buyout program. And that's the only time that the insurers will allow you to refinance to pull the equity out to pay out your partner. The only caveat to that is that one person has to be able to support the stress test and they have to qualify, okay?
Sorry, just have a quick question.
Sure.
In order to do that, will that one of the spouse has to be approved again for refinancing?
Yes.
Or- Yeah.
Yes, so it's the way they look at it as it's, the lawyers are involved, it's a purchase agreement that's drawn up. So you and I are married, we're splitting up, I want to keep the house, there's a purchase agreement, we submit it to the lender, to CMHC or Genworth or Canada Guarantee, they approve it, 95% loan to value, and pay you out, and then now the property's in my name. Because we're not allowed to refinance properties over 80%, only in that circumstance.
And the stress test would be, the rate would be a different rate.
Yeah, so it's like a normal mortgage, you're qualifying the same way as you would today, so you still have to do the stress test. So it's a tough, it's not a program for everybody, especially if your house is worth, $1 million. It's very hard for one person to be able to afford paying or qualifying for that mortgage, right? Okay, so homeowner eligible, yeah, sorry.
I have a client, they are a couple and the husband is not on title and the wife bought it 8 years ago. Now they want to sell this one, they buy a new one. So in this case, the husband still consider the first time buyer.
He's still considered a first time home buyer as long as he's not on title.
Oh.
Yeah, he can't be on title.
Yeah, but if they buy it together, so do they still?
Well, he doesn't lose his first time home buyer because he's the first time home buyer. So she would, if you're asking as far as land transfer tax, he will get a credit for the land transfer tax portion, but she won't. So let's say they buy in Toronto. In Toronto, there's two, if you are already purchased a home before and you buy a second home, you're a repeat buyer, there's dual land transfer tax on her part, and then he will get a credit or whatever as being a first time home buyer.
But he can still get his the first time home buyer instant.
Yeah.
Yes.
Yeah, at least one of the borrowers, yeah. So you need to be a Canadian citizen, permanent resident, or non-permanent residents who are legally authorized to work in Canada. Your total qualified income is $120,000 combined, okay? At least one borrower must be a first-time home buyer. And the first mortgage plus an incentive amount cannot exceed 4 times the total qualified annual income. Okay, so how they've come to determine this is, so let's say they're buying a $400,000 home and they have $25,000 to put down. Okay, so the max income that we can use is $120,000. So if they make $125,000, they don't qualify for this program. Okay,
If they make less.
they have to make less than 120.
Oh, less than, yeah.
Combined.
Combined.
Yeah. Okay. Hi. How are you?
Sorry, I'm Celeste.
Oh, hi, Celeste. Nice to meet you.
I'm great. I was doing a presentation. I'm glad everything went well. You
Yeah,
can
this is
continue.
awesome. Thank you. I
She's
just kind of
great.
sort of helped
Yes.
myself. Okay.
She's great. You have 6 locations watching you live.
Hi.
So you can say hi to everyone. My apologies for not introducing her, but really, Mary doesn't need introduction. So
Thank you,
can
Celeste.
continue your session, and I'll see you later. Definitely.
Okay, thank you. So there's a formula that they use. So once you deduct the down payment, so the down payment that I put in and then plus the incentive, that's considered a first mortgage, okay? There's a ratio that they use. You have to divide the first mortgage and incentive into the income. If the ratio is over 4.0%, you don't qualify for the program. It's very, 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 very strict. I will send you, if you leave me your email addresses, I'll send you some formulas, but everything is on this website. So take a note of this website. It's called placetocallhome.ca. It's very informative. Everything you need to know is here. How to calculate the maximum purchase price, determine their eligibility. There is a 1-800 number that they can call, or you can call for your client, or you can call one of us, obviously. And then if you just do this drop-down menu, there's everything that we're talking about today.
And then
Okay.
there's also the handout.
Yep.
In your package, just like a quick little overview, okay? What the formula looks like.
Okay, so if you take a look at the example, the equations that work hand in hand. So here's an example using a 5% incentive. Oh, these guys don't have it on the, hang on. Okay, sorry for those that are on the live feed. I handed out this this example. I can email it to Celeste, and then Celeste can send it out to everybody. Okay. So the annual income is 100,000. They have 25,000 of their own savings, and the government's going to kick in 5%. So their purchase price is $385. From that incentive, they're going to get $19,250 from the government. So the insured mortgage is $347.50. See where it says mortgage to income, MTI, 3.6? That qualifies. Anything over 4.0 does not qualify, okay? Our only problem is there's not many properties out there that they can buy at 400,000. So the program is kind of like, but if you've listened to the news, the government has talked about they want to increase it to 750. But I don't know if it's an election thing or.
So this is the maximum purchase price value.
Yeah, this is an example of
I mean, what is the maximum purchase price?
the maximum purchase price that they're able to get on this particular example is $385. They could go a little bit higher. They can go up to 400. It depends on how much they have in down payment.
Oh, my question is on the program. Is it hard? Are we
Yeah, it's
eligible
about
to get?
500,000.
Oh, that's maximum.
Yeah.
That's right.
Yeah.
So if it is more than 500, possibility, for example, it is 600,000. Is it possibility buyer use portion of 500 and 100,000 cash pay? You know what I mean?
I don't know. I don't
The
know.
purchase price is 600,000, but the maximum purchase price for this program is 500,000.
500, yeah.
And for the remaining 100,000, the possibility the purchaser use the first 500 for this program and pay $100,000, 100%.
If they want to use this program, no.
And
Because it will go, I'm so sorry, it will, I think it will go to another category up to 1 million, 10%. Is that right? If the purchase price.
Anything
is-
over, yeah, because anything over 500,000. So if it's 550,000, let's say the purchase price, and it's insured, the first 500,000 is 5%. Anything over 500,000, it's calculated with 10%.
I heard about this program, the maximum purchase price is 520,000. Is it correct?
No.
500,000 it is.
No, from the documentation that I got, it's not 500.
And it's based on income, the calculation, there's so
Yeah.
many different factors to it that.
And the maximum amount the government will pay is 40,000.
So the maximum they'll give you is 10% on a new construction, but the new construction has to close within 18 months. So if it closes in 20 months, you don't qualify for the program. It's
New construction 10%.
10% new construction, mobile homes, manufactured homes, resale homes, that's 5%. You only get the 10% for new construction, but it has to close within 18 months.
5% means the maximum is 5%, 25,000.
Yeah.
That's
Yeah.
what they say.
And then up to 10% on your construction.
And the
Could be
program,
7%, could be 8, but
Yeah,
Closing or occupancy must be in 18 months.
closing has to be, yeah, because that's when the mortgage activates, right? And this program ends October 2024. March of 2024. Yeah, or when they run out of money. I don't think they'll run out of money, but I don't know when. I can't see anybody
Yeah,
with this program.
Just a quick question. None of the pre-constructions are closing.
I know,
Unless it's a townhouse.
I know,
And townhouses you can find 500.
I know.
So it's not.
Makes sense, eh?
I don't imagine.
It makes sense in the program, doesn't it? I know, we brought,
Assignment has been,
sorry?
assignment.
She wasn't sure about that. We asked her on the question on the webinar and she's gotta get back to us. They're not sure. Again, like I said, this is a new program. They don't have all the answers just yet. They haven't even rolled it out yet, but that's a good question. I'll get back to you. If you need me your contact information, I'll let you know when she gets back to me.
And you said the application, you can put it this November.
Yes, November 1st is when they go live with this. This is the first application.
We'll start funding
Yeah.
November 1st.
Yeah, so you can do it. You can sell it now. We can process the application, but the closing date has to be after November 1st.
Or after
November
November,
first,
closing.
yeah. Yes, okay. Available, what type of properties, owner occupied properties? You can do single family dwellings, condos, duplex and triplex. Now, when you do a duplex and a triplex, you know how they earn income, rental income? So your rental income and your own personal employment income cannot exceed 120,000, okay? So that's just, okay, so what happens is they register a second mortgage on the property. So keep in mind, it's gonna be more legal fees for the clients, registrations, yeah.
For the rental income, 100% of the rental income added to the income, the actual income, or half of that?
No, full income.
Full income.
Yeah.
Rental.
So they will get registered as a second mortgage, so that they're gonna pay more in legal fees. Just to keep that in mind, make sure you explain that to your clients. And then as well, let's say for instance, they wanna pay back the loan earlier, they gotta pay the appraisal that is ordered by the insurer, as well as they'll have to pay the legals again to have it removed, okay? So it's all cost to the client, okay?
Oh, excuse me, but you said, who give this money to the buyer?
The government, the insurer, CMHC, Canada Guarantee, or
Okay,
Genworth.
But if the first mortgage is a trust company, they accepted to seek a second.
We don't know
mortgage?
if all the lenders are doing it at this point. We don't know which lenders. We asked that question on the webinar. Are all the lenders participating in this program? She said it depends. You have to contact the lenders. I deal with 50 different lenders, so we'll have to reach out to the lenders and see if they're all participating in this program or not. Yeah. So I don't have an answer for you just
You
yet
have
on
to
that.
find out which lender.
I'm assuming the big banks will all do it, and then your big lenders like First National, MCAP, CMLS, like they'll do it as well.
And the calculation for additional charge, because CHMC has additional charge.
The premium, yeah.
The premium. Is it the same calculation with the normal
Yeah, normal.
5%?
So the whole purpose of this is to bring you down the bracket. So if you're putting 5% down and they're giving you an additional 5%, so now your premium, instead of being calculated based on 95%, it's being calculated on 90%, which is lower. That's the incentive that they're trying to. It's not a very big incentive, but there are people that need it, right?
But the purchaser must put maximum, actually 5%, not maximum.
Yeah.
Is it yes or no?
They need to put minimum 5%.
If the purchaser put 19%, is it okay? And 5% government give it to purchaser?
That's a good question. I'll take that offline and I'll get back to you on that one. But I don't.
It has to be right below the 20% mark.
Yeah.
I think it's like.
Because you can't. Well, then they don't need the incentive, right?
Yeah.
Because if they're putting in 19%.
Because I held it is maximum 5%. You cannot, purchaser cannot.
It
than
doesn't have that
5%.
any in our literature, but I'll get back to you on that one. That's a good question.
Because the premium will be changed, the insurance cost.
No, because the,
19%
yeah,
If you put it,
well, they can go into the 85% bracket. I know like with new construction, they can do that. But it was not, I didn't,
No, they didn't touch on
didn't
that.
touch
It's
on
such a new program right
Yeah.
now that they haven't ironed out it.
Okay, so that's, so please take note of that website. It's placetocallhome.ca. Again, like I mentioned, there's this 1-800 number that you can call, and there's specific account managers dedicated to answering questions.
Some users on credit, secured or unsecured.
Okay, so next on the agenda is B lending. That was part of the what we were originally supposed to talk about. So I'm not sure if you know, but outside of the big banks, we also have lenders like Home Trust, Equitable Bank, Avail. We have about 7 B lenders. We call them B lenders or alternate lenders. And those lenders use different methods of approving clients. So for instance, I'll give you the most typical example is a self-employed person. So a self-employed person works in construction or is a cab driver or a truck driver. On their personal tax return, they won't show that they make a lot of money, right? So their line 150 of their tax return will show maybe $45,000, $50,000. But it's not enough to service the mortgage going to a traditional bank like a Scotia and RBC, right? So these alternate lenders, what we're allowed to do is we're allowed to use bank statements. So as long as you can provide, your client can provide 6-month bank statements showing regular deposits, whatever their deposits are. So let's hypothetically say they deposit in a span of 6 months, they've deposited $50,000. So we would multiply that by 2. So we could use on average an income of $100,000 to qualify and get them approved, okay? So we do deduct some expenses from that $100,000, but we'll generally be able to use about $85,000, $90,000 of that $100,000, okay? Now these lenders all charge 1% commitment fee of whatever the mortgage amount is. So if it's a $600,000 mortgage, it's a $6,000 lender fee, okay? The interest rates for those are anywhere between 3.99 to 4.5%. Depends on credit. So you may have clients that have really bad credit, 400 beacon scores, bankruptcies. We love them. We do them all. Those companies, that's what they're in business for, is to get people back on their feet, get their credits improved, and then they can move over to a bank. So we don't typically say no to clients. I mean, we pretty much do everything. If it doesn't fit the A space, we try the B space, and if it doesn't fit into the B space, then we go to private. So we can do a combination of the two as well, right? So if a client, if the max the lender will approve the client at 65, we could do a private up to 75, 80. So there's lots of things we could do.
can I ask you a question?
Yeah, you always.
What is the maximum loan?
80% loan to value. However,
Maximum 80% loan to value.
However, so when you're going through the lender, it can't exceed 80%, okay? So when the underwriter underwrites the file, so let's say we take it to Home Trust, let's say, and they're short on their deposit, so we need to take it up to 80%. No problem. As long as they qualify, we can tell the lender they're getting a second mortgage to 80%. We include it in the ratios, we include it in the liabilities, no problem, as long as it's 80%. You cannot exceed 80% because the government has made that very clear. You're not allowed to purchase like at 85%, unless you're going through CMHC, Genworth, and Canada Guarantee. So what we do is, if in the event that happens, no problem, we can still do it. We just have to advance the first mortgage first, and then the next day we can put a private up to 85, 90%.
Drive it.
Yeah,
But the
private.
private interest rate is high.
Private interest rate on a second mortgage could be anywhere between 7.99 to 13-14%. Depends on credit, depends on where's the property, lots of factors.
No, how about the B lender?
The B lender maximum they can go is 80%. They cannot go.
No, I'm not
80%.
talking about the percentage, I'm talking about the amount. Is it $10 million?
Oh, the amount. Oh, that doesn't matter. If it's Toronto, they typically will go to 80%. Not on a condo though. In condos, they like to sit at 75%.
But the A lender doesn't give you more than 1,250,000. Am I right?
Okay, you're asking two different questions. So
Yes,
yeah.
For the B lender, it is unlimited as long as.
So
it is
no, B
80%,
lenders,
85%.
it depends. Like if it's a $3 million purchase, the B lender may go to 80%. They may not. They may go back to. They may
If
scale
it
it to
is $4 million
75.
purchase and 50% down payment,
50% down payment.
$2 million down payment.
Yeah.
$4 million purchase.
Yeah.
Can we apply with the lender B?
Of course,
No bank statement.
with bank statements. If they don't show enough income, then they would go to a bank, right? So if they can't go to a bank, then we use bank statements, business financials, bank statements. That's how we qualify them.
Without bank statement, you don't have any.
Well, we need to show serviceability somehow. We need to show, if they get audited from OSFI, they have to say, well, how did you give this guy a loan? Where is their income? Where is it coming from? So you always have to still show serviceability somehow. So that's why we use the bank statements. There's people that it's amazing how much they have in deposits, but they don't show income. They don't want to pay the taxes, right? But their business account is very, very healthy. And, we've seen up to like 10,000, even 20,000 deposits a month. So people have the income that's being deposited. That's the income we could use to qualify them for that mortgage. The interest rate's a little bit higher, but it's either you pay the government or you pay higher interest rates, either,
Doesn't matter resident of Canada or no.
Well, they're not, okay, so that's been a question that, if they get audited, will OSFI tell CRA? They're not allowed to do that. They're not allowed to report income or disclose income to CRA. They're not allowed. Do they do that? I don't know. I have not heard anybody get audited for that reason, right?
So the business, if it's incorporation.
Yeah.
And then the incorporation, let's go, for instance, it's mine.
Yeah.
But it doesn't really consider it's your own account because it's a business.
Mhm.
You can still use it.
Of course. Yeah. So let's say, for instance, your bank deposits, like I did a client, he bought, a $2 million condo downtown, and he showed $40,000 on his tax return. But his financials were fantastic. His net income and his financials were $800,000. So I don't have to use $800,000 to qualify him because I don't need to use that much. So what did we use on that? 285. So we used $285,000 to qualify him, and they did it that way. So if we didn't use bank statements for that.
No.
That one we didn't use bank statements because his financials were so strong. His financials were incredible. So, I think he had like $20 million in revenue. So it was a healthy, but he can't get approved at a bank because he only showed $40,000 on line 150, right? So.
Is there any kind of pre-approval for this? That's most of our clients ask about the pre-approval.
Yes. So I pre-approve everybody. I pre-approve whether you're an A lender or an A client, a B client, or a C client because, well, you don't want to waste your time either. I don't want my clients to buy something that they're not going to get a mortgage for. So the clients, when I speak to them, they know exactly what they're getting themselves into. So it's like, you absolutely do not qualify at a bank at all. However, we have these lenders. You could do this. And if you like it, then you can proceed to buying a home, right? So yeah, so I do pre-approvals for B lenders all the time. So we look at their credit. I ask for all documents up front. I want to see their income statement, like their income statements, their financials, their bank statements. I need to see how healthy the business is. And I'll know just by looking at all that information whether they'll get approved or not. Yeah. So those B lenders, I'm going to tell you, GTA, they love GTA. It's just when you go outside of GTA, they're a little bit sticky on the loan to value. They may go to 70%, maybe 65%, right? They'll still do them. Like they'll do Muskoka, they'll do all those areas, but they just won't, they'll scale back on the loan to value. Okay? Any questions? So that's B lending in a nutshell. So don't ever say no to your client. I mean, every client falls in a different bucket. And until they speak with someone like us, they really don't really know their options. So people just think that maybe just an A bank, but you know, the rates are not that bad. If you can get into a house and pay 3.99% until you show income and report the income for 2 years on your, and then we just move you to a bank. So there's lots of options, and people have to get around, they got to think about it as you either pay your personal taxes to the government, or you have to pay a higher interest rate to get a mortgage. That's just the way it is nowadays. Okay, so I want to talk about equity takeout, and I think this is a great opportunity for everybody, and I'll tell you why. So we have an aging population. A lot of grandparents, parents are sitting on big houses with they're worth $1 million, $1.2 million. Their grandchildren are getting married. Kids can't afford a home because they're priced out of the homes. So I've been doing this a lot lately, and I think it's a great thing for you to, you know, look into and shift your way and look at new opportunities. So I had a client recently come, they're newlyweds, and their parents were going to gift them $100,000 on their parents, both parents, $50,000 each on their down payment of their home. But the house that they bought was like, it needed work. So that just got them into the house, but then it still needed work. So in conversation, the the grandparents have a house in Vaughan. It was worth $1.2 million. They're in their 80s and it's free and clear. They both live in the home. So I suggested, well, why don't you take out a reverse mortgage on your parents' house and use that money as the down payment or to fix the property. And then once your property's fixed, we refinance it and pay them back. And we did that. So as long as you keep this plan for 3 years, there's 3-month interest penalty. Anything after that, like after 5 years, there's no penalty. So you can pay it back. So it's just because we have a huge aging population, and these grandparents and parents are sitting on all this equity, but they don't know what to do with it. So I included it in your book as well. There's some truths and myths about the program, frequently asked questions about the CHIP reverse mortgage. So I'm going to just give you some examples on how to calculate. Okay, so let's say hypothetically you have the first homeowner is the male, is the grandfather. Okay, I'll just put L4L1P2. Okay, it's a single family dwelling, and the wife is, let's say, oh, it was funny. Okay, let's say Woodbridge, and let's say the estimated home value is 1.2. Okay. So they technically are eligible to withdraw this amount of money from their home. So this is what I'm trying to say. Like, you don't have to use all that amount, right? You could use 200,000, 300,000, whatever. It's just they're trying to they can help their grandchildren get into a home, carry less of a mortgage till they're established. The property value goes up, they refinance, and then they can pay their grandparents back out. Anyway, with this, there are no payments. They can make principal payments if you want. You don't have to. This works the same as an amortization. So you know when you have a regular mortgage, you have a principal and interest payment, and then, you know, some goes to principal, some goes to interest, and then as you keep paying, the balance lowers. It's the same thing, but the reverse. So you have a principal and an interest, and it gets added on top of the money that you're borrowing, okay? So again, 3 years, you keep the plan for 3 years, it's 3-month interest penalty. 5 years, there's no penalty to pay it back, and if you pay it out in 1 year is 5%, if you pay it out in 2 years, it's 4%, okay?
So
The
is
penalty.
for the second mortgage?
No, this is called a reverse mortgage. A reverse mortgage. So it's a chip mortgage. So people that are in their 90s, 85, that are sitting on all this equity, have this free and clear property, we take the equity out and we use that to help grandchildren buy a home.
And you can use this money for the payment as well? They use this money for the payment?
Yeah, they can if they want.
For
If
the
you
mortgage payment, I mean, you said it is like mortgage, that's been.
No, there's no, you don't have to make a mortgage payment with this. So if you take $659,000 out of this plan, you don't actually have to make a single payment. So what happens is the principal and interest gets added to this number, okay? And it accumulates, right? But this is threshold. There's only so much that the chip reverse mortgage will go. If
Okay,
people,
reverse mortgage, this company sits at this lender, it is a lender.
yeah,
Sits at the second position or the first position?
first position.
Means if someone wants to use this one, shouldn't have any mortgage, because if elects the first position, has to pay penalty. For example, if I do have mortgage with CIBC, if I want to use this one, they don't give it to me.
Right.
They said you have to come with us.
Right.
Yes.
Absolutely.
And I have to pay penalty to CIBC. But
Yes.
I want to elect
Yes, but this plan is more for your you know,
Mortgage
the
free.
75 and up.
Paid off their home.
Either paid off their home, it's just sitting there, it's like, it's free and clear,
Yeah.
you know? It has to be an owner occupied property. So what you need to understand is these numbers here. Where's my calculator? Oops. Calculator. What you need to understand is it's based on your age. So the older you are, the more money you're able to pull out of the house. So let me just give you another example.
what's 55?
So let's say you're 66 years old and you say 66 here, okay? You'll notice a big difference. Okay, same scenario. 363. You see what I mean? So the younger you are, the less money you can pull out.
But minimum 55 years. If
Yes.
someone is
Yeah.
54, not eligible.
No. So it's a good plan. It's fantastic. It can help even your children if they have to purchase homes. If you're, you know, obviously if you don't have the mortgage on the property, or I have some seniors that are paying OAS, CPP. Sorry, they get OAS and CPP, and they still have a small mortgage. And it's like, why are you paying a mortgage at 75 years old? Just do a reverse mortgage, and then you can stay in your home. Like, this program's good too for elderly people that don't want to leave their homes and need in-home care. You know, a lot of burden is put on us as the kids to, you know, help their parents and what have you. But this is a good alternative that, you know, you can draw money out of the property and you can pay for a home caregiver, and they can stay and live in their property longer. So there's many ways you can use this.
How much is the interest rate?
So the interest rate, right now, it's kind of high. It's about 5%.
5.74.
Yeah.
It's expensive.
So
And they can also receive a lump sum or a monthly amount as well. So let's say they're drawing to pay bills, they're drawing to live, or a
Yeah.
caregiver, you know, even the kids can help them apply for it, and
Yeah.
they have this money on a monthly basis.
So-
or in a lump sum.
So we've used this plan for three different ways. Either pull equity out to give it to the grandchildren or children. We've used it for that scenario where they want, the parents can stay in the home and caregivers. We've also used it for, I'm so sorry, I just lost my train of thought. Yes, go ahead. Don't remember what I'd say.
Over the years, the grandparents passed away, and so the bank or whatever, they will take over those properties, is that right?
No, nobody takes over your property. Nobody goes on, you own the property. Chip doesn't own the property, you own the property. The owner passed away, then they have to pay back the loan. So let's say your parents pass away, you're the executor of the will. Your job is to make sure that you contact a lawyer and then you pay off all the debt that's required. That's it. Same like anything else. Like if they had a mortgage with the bank and they passed away, you would have to do the same thing, right?
Is it like the bank or chief, they gonna appraise this house and the legal fee that they have to pay upfront?
Yeah, not upfront, on closing. Everything's on closing, yeah. So yeah, the appraiser is an approved appraiser by Chip. So it has to be approved by Chip. So
When you apply for the loan, do they go for a medical checkup?
no. You do have to have, you have to be able to make your own decision though. So what happens is, and we've noticed this has happened, people think about wanting to do this, but then, 5 years down the road, they have dementia and then you can't do it. And you can't do it through power of attorney either. The person of the homeowner has to be of sound mind. Yeah. So that's something to keep note of, right? So, okay, so that's that. So take a note of this one, chip.ca / chips.ca will take you right to the website, okay? If you go into the questions and answers, you have a list of things here as well. I've included some myths about it. A lot of people think that, again, you lose title of the house and you don't, okay?
Is there a potential that you could end up underwater at the end? And the person just lives a lot longer than the actuary thinks they will?
No, because there's a threshold. They won't go over a certain amount. So they'll approve you the max. They have a program, the max will do is 65, right? So there is always enough equity, and usually the prices of homes go up, even if there's a downfall of the prices of home, if they won't drop that substantially. So they're pretty covered. It's a pretty covered program. It's been very successful. Yeah. So it's another option. I look at it as a great option for grandparents to help their grandchildren. And it's a great option for you guys because it's, you can get kids into maybe a bigger home or what have you, right?
It's very popular in the States.
I don't know the state's program. I don't know if it's very similar to ours, but the states have very funny, they have very different ways of doing mortgages.
Is there any differentiation on gender, or that's for female or male?
Okay, so yeah, that's a good question because the male,
It's cheaper, yeah.
no, you get more if you're a male, and it's your age, right? So I hate to say this, please don't be upset with me, but statistically, males die before females. So that's why they get more. Sorry, go ahead.
So how it would work? Suppose property is worth 1.2 million.
Yes.
And you have mortgage of 200,000.
Yes.
Right?
Yes.
So to get this chip, is it a good idea to go and borrow 200,000 to bring the mortgage clear and then go to chip, or?
You don't have to. So let's say there's some clients that have a $200,000 mortgage, let's say at RBC.
Yeah.
But they just can't keep up with the payments anymore. They don't have cash flow every month because all their money that they're getting in from retirement is going to pay their bills, right? Property taxes and stuff. Depending if they would have to pay a penalty if they're breaking the mortgage before the maturity date. I would always advise find out what that amount is. If it's small and it makes sense, then we do it. But if it makes sense to just hold on until it's mature, then I would do it on maturity and just move it over to chip. Yeah.
So the chip is basically for the mortgage free, right? Just like.
Yeah. It's good. No, it's either way. Like I've done mortgages where they've been, you know, they have a line of credit at CIBC, but they're only paying interest, and it's not paying, you know, you're just paying interest every time. And we've moved it over to a chip just so that they don't have to worry. They don't have to worry about making any payments, right?
And then again, let's say if this, let's say this property is 1.2 million and there's no mortgage on it, and then they do the chip, right?
Mhm.
So they got 600,000, right?
Mhm.
So they can take this 600,000 and go and buy another one.
Technically, yeah, I would tell you what to say and what not to say.
Is the only home equity bank doing this business?
No, actually, Equitable Bank now also does it as well. They're a B lender. But I'm gonna be honest with you, they've only been in the market for 2 years. But they've been in the market for over 20 years. Like they are the gurus of this. So but there is another lender that does it.
If I have a client want to do this, then
You'd have to contact me. Yeah.
You have a service charge.
No. Oh, so let me make that clear, because a lot of people think that mortgage brokers charge fees. I get paid directly from the bank. The only time I will charge a fee is if I'm doing a private mortgage, because the private lender does not pay us. But Home Trust pays us, Equitable Bank pays us. There's no reason why we would charge fees unless we're doing a private mortgage, okay? So just so you know, because that seems to be, well, I don't want to work with a broker because they charge fees. Not to say that brokers don't charge fees, they are, but I'm not one of them. Yeah.
If the house is paid for.
Yep.
And how would you compare chip program with the line of equity program?
The line of credit, you mean?
Yeah.
They may not qualify. That's the problem. Yeah, you still have to show serviceability. So if you're 75 and you're getting $14,000 a year in income for pension, and you need a $300,000 line of credit, you won't qualify at the bank. That's the problem. Whereas here, they don't look at income. There's no income qualifying here. Okay. So moving right along, just to refinancing. So again, off the bat, refinancing, if you want to consolidate, if your clients want to consolidate debt, the maximum we're able to refinance is 80% of the value of the home. Okay. So an appraisal will go out, figure out what the market value of that home is. The max they will take it is to 80% and consolidate the debt. They do still need to qualify under the same rules, stress test, contract rate +2, all that still applies, okay? Does anybody have any particular questions on refinancing? Or anything, sorry?
I have one. How difficult is it, blend and extend with the banks? They are tough on that part, or
Are they tough on what?
on blending and extending? Say if I have a mortgage.
Have they
blend it
changed
with
their
the person, set them
lending?
together?
Yeah, their lending criteria has changed. They've gotten stricter. There are less exceptions. Ever since OSFI's, like OSFI is the office of the financial superintendent. Okay, so they literally have desks and seats in these lenders. Yeah, so they're constantly being audited. Any random file can get picked up, and if so they're looking for fraud, they're looking for income fraud, down payment fraud. Yeah. So the lenders have, or if let's say the TDS is 80%, they're gonna wanna know, why did you approve this deal? So that's why now more documentation is required. We ask for more documents. Not to say we can't do those deals, it's just we have to back it up with, well, they have 600,000 in liquid assets, and that's why. It's changed. Those days of, I was in the business when we were doing line 150. Oh, he's construction. Okay, we'll use 90,000. As long as your taxes were paid, your NOAs were paid, no problem. You used 90,000. We would just guesstimate whatever makes the deal work. Those days are done. Those gone. They're gone. Those good old days. Yep.
That's a good question. For the refinancing, you have to get the property appraised, right?
Most times, yes.
And then your credit will be checked.
Yes. So I'm gonna touch on credit, because a lot of clients are like, oh, don't check my credit, I don't want my credit checked. But they have 45 days to shop around and it doesn't affect your credit. So a lot of people think, well, no, I already went to TD and they pulled my credit, so I don't want to pull my credit again. As long as it's within 45 days, it doesn't affect your credit score, okay? Because they want you, it's consumer's choice. You're allowed to go and shop around for the best product and the best rate. You should be able to do that. So Equifax and the banks give you 45 days for that.
So you can have as many credit checks within 45-day period?
45-day period. It will show up on your bureau, so every time that you, but they'll know you're doing that because they'll do that even with cars, right? Yeah. Okay, as long as it's within the 45-day window. So last but not least, I want to just touch on this because I don't know how many of you are oops, that's not what I wanted to do. Uh-oh. This one. Okay. Oops, I got rid of the window. Sorry. That, and then that. Oh, how do I make it smaller? Like that. There we go. Okay. So CMLS Financial, there's a few lenders that specialize in this. Okay. So they're multi-units plus 5. Okay. So a lot of people are looking to buy multi-units. And I don't know if you know this, but if you buy a multi-unit that's like a 7-plex, 8-plex, 10-plex, whatever, you qualify and you can get a mortgage up to 85% loan to value. So it's insured through CMHC, Genworth. You get a 40-year amortization. Premiums apply, you know, the same insurance premiums apply. And the beauty of this is that you're not using your income to qualify. You're using the income that's generated from the property. So Toronto properties are a little bit hard to get approved, but properties that are in Alliston, Guelph, London, like those areas there, we do a lot of them, 85% loan to value.
Excuse me.
Yeah.
For example, Waterloo.
Yep.
If someone buy a unit, apartment, condo unit with 5 bedrooms and that building rented to the students.
Okay, that's student housing.
The student house.
Yeah.
This one, that one is.
No.
Not.
That's a different program. We do student housing,
Oh, you
but not in this particular. Like with the problem with student housing is one kitchen, you know,
Yes.
2 bathrooms, and they're sharing all that,
Yes.
right?
You're talking about rooming house?
Yeah, rooming houses, student housing. Very few lenders do them. I do have lenders that will do them. Their interest rate are about 5.45%, but they can do a 40-year amortization on that. And they'll go up to 85. They'll go up to they will go up to 85%, but they will charge 82% fee.
It is 80%, they charge.
80% they charge, but they don't charge as much. I think it's 1%. But it's great. Like if you have a property, that has like 6-7 bedrooms and you're generating 45-50 grand a year, you can easily make the mortgage payments on that. But now you're maximizing, you know, the equity in that property.
No income needed.
Yeah, income from the property. Oh, income personally,
Personally.
income. No. They look at that. They do look at what you personally earn. They look at your assets. They want to see that you're able to carry it if in the event something happens, right? But it's not through an institution. They're called MICs. It's called a Mortgage Investment Corporation. So they specifically just do student housing.
Do you have any program for Airbnb friendly apartment? We don't have any special.
No, there's no lenders taking Airbnb income. I know, it's too bad, because they make really good income. Yeah, we don't tell the lender it's ever an Airbnb, they won't do it. They won't do it, especially the ASAP. You gotta be very, careful what you, yeah. Yes.
Can you do a small calculation of give this property and you can tell the quality or not? That's the property is worth 2 million, right? And but again, the land alone on that property is worth 2.3 million.
Mhm.
Property for sale for 2 million, but land alone is valued 2.3 million. And then you have a house, right? And there's a 1, 2, 3 units, right? In other words, 3 kitchens, say 3 washroom and everything, separate and everything. And it will generate a rent of about $6,000, 5,500.
But then are you saying a triplex though? No, this doesn't qualify for this program.
No.
No, a triplex has to be 5+.
Oh, it has to be
Yeah.
5+.
So these are good for those little buildings you see downtown that are like, 6, 7 units, or the ones out in Waterloo, Kitchener, those.
So from where, how to get the lending on that particular?
Yeah, on the triplex, you can do it through a bank. And if you do it through the,
They will do it?
yeah, RBC will go up to 6plex.
This is going to be 3plex.
Yeah, 3plex, I do them all the time through
And they will
Scotia.
look at the land value also.
Whatever the appraised value comes in at from the appraiser. So what the appraiser does, so if you have a house that's sitting on 20 acres of land,
No.
I'm just saying,
Yeah.
the bank will only accept 5 acres, that's it. They won't, they don't take all the 20 acres.
Yeah.
And does legality come into that? Because very often you'll run into properties that effectively are 3 units, but they're not legal. And they're generating six thousand.
Yeah, some lenders are very particular. They want, if it's a triplex, it's gotta be 3 units, separate entrances, conforming.
Yep.
Some lenders want, make sure they're registered with the city. So it really depends on lender for lender. There's some that don't really care. Like we could do a rental basement apartment and it doesn't have to be conforming. So it just really depends on the lender. Every lender has their own criteria and products.
And then but the change, that there'd be a change in the cost. Whether it's legal or not.
No. Depends on the lender, what their program is. Yep.
And who will be the best lender, the one I give you?
Triplex?
Yeah.
Anyone. Scotia, TD does them, CIBC, RBC does them. They all do them.
And is there any special fee or anything for these?
No, so just so you know that rental, anything with rental, I know that the client collects 100% of the rental income, but lenders will only use 50%.
50?
Yeah, so when we're qualifying on a mortgage, we only use 50% of the rental income, 100% of the property taxes, and 100% of the heat, and 100% of the principal and interest that they're paying. So oftentimes what happens is they're in a shortfall, and that shortfall goes as a liability. So it's getting harder and harder to approve, especially with the stress tests and stuff.
Okay, thanks.
Okay, so the presentation's concluded. This is my email, my website, marygrace.ca. Just punch in marygrace.ca. My website will come up. They can read my blogs, apply now, and it's just a little bit about me and my testimonials. Okay, so usually I direct them to my website to apply, just way I don't have to send them a consent form to go to the bureau.
You have certified for newcomers less than 35%.
So newcomers to Canada, like new to Canada, yeah. So new to Canada, as long as they qualify, they only need 5% of their own resources. So new to Canada program is really good. If you have new to Canada clients, CMHC, Genworth, Canada Guarantee, they all insure those deals up to 95%, as long as they qualify, right? But their criteria is different. So clearly, because they're new to Canada, they don't have a credit history. So that's okay. They're okay, and they don't have. Some of them may not have jobs, as long as they have some sort of employment or they're looking for employment, we can get those done too.
5%.
Yeah. But you have to be new to Canada and you have 5 years to apply for that. After 5 years, you don't qualify. But that's a great program. If you have, your network of people, family, friends that are coming in, they're moving to Canada, it's like the unfortunate thing is your children will go through scrutiny. You need a job, you need savings, you need to show credit, you have your credit score's gotta be good. You know, you have to show, that you saved some of your down payment, but if you're new to Canada, none of that applies. So it's a good
And
thing
does
to
it
tap
need job
into.
letter, you said?
Yeah, so I actually just read something recently about, the New to Canada program that they made some changes to. I don't know if I can pull it up, hold on. But I read recently that now you don't need. Yeah, I think it's this one, hang on. No, that's the incentive program. That's the incentive program. I read an article that because you needed a minimum a job letter for 3 months, but now they removed that it doesn't have to be 3 months. So I'll have to find that article again. Because I kind of, when I read that, I was like, really? That's pretty good. That's pretty good. That is like an area that you guys should be tapping into.
So what are the qualifications? Is that the only one?
Yeah, they need 5% of their own resources.
Job letter.
Yeah.
That's it.
That's it. They don't look at credit. They don't, no credit. Like, let's say you want to put more than 5% down.
That's from e-lenders.
No. A lender. A lender.
But do you need to provide like where your money comes from?
So let's say, for instance, okay, so the program is very particular. So 5%, yes, from your own resources. But let's say you put 10%. That other 5%, they can borrow it. It could be from various different. Their program is very, very unique. It's very easy to get a mortgage under the New to Canada program.
And I have to do they need to see how your payments, your monthly payments come from. They don't.
Well, they need a void check that they have to pull it from your bank account.
Show. Right
Yeah,
now, the bill lender says the
How
one.
you prove? Yeah, how you prove you can pay like monthly?
Yes.
That's the beauty of that program. It's new to Canada. So sometimes they may ask for a foreign letter from their bank and wherever saying that, they're in good standing, but we don't pull international credit bureaus.
That letter can come from anywhere, right? Because you don't know where that bank
Yes.
is located or what country it is.
Yeah. I mean, it's a good program if you have people coming into New to Canada. And don't get me wrong, it's a great program for immigrants that are coming here, they're making a life in Canada. It's a great way for them to purchase. The only thing that's sad is that our own children don't benefit from this. It's like the scrutiny that we as Canadians that we've lived our whole lives here go through, is a little bit too extreme. Versus, you're allowing someone that you don't even know from another country to be able to purchase. So that's the unfortunate part, because our kids are kind of not getting the benefit of it.
For someone who's new to Canada but doesn't have the PR yet, but they will be getting.
Yeah, you have to show that you have the application in process.
And then they would have to pay the 50% tax in advance until they have the PR.
Right, and that's refundable, by the way.
That's
Within
the 4 years.
Yeah.
But so it means you right now that situation is called non-resident Canada.
Yeah.
For non-resident Canada, 5%
No,
they can do it?
non-resident, unless you have your PR and you've applied for your PR and you're sure you're gonna get your PR. But non-resident, usually, okay, if it's from the US, 20% down. If you're from abroad, internationally, then it's 35% down.
With the 35% down, how much money wise maximum loan?
Oh, it doesn't
Doesn't
matter.
matter. But 35%, can you, for the non-resident with the work permit, can you provide 35% down payment?
Yeah, they
Because
have,
I asked you this question in the beginning, I said my client put 50%.
Iranian people, for Iranian is a 35% too.
How old was your client?
32.
yeah, so where did that, they're gonna ask, where is that money
The
coming
money,
from?
the money
Yeah.
is coming from one country in the Europe.
Yeah. So I'm gonna tell you, because there are some countries that are sanctioned, that, yeah, unfortunately, that they won't.
No, of course,
allow-
from
yeah,
the Iran, they cannot send any money here.
Yeah.
But from the other country, yes, they
Yeah.
can do it.
Yeah.
But the money, it is in the Canadian bank now.
Yeah, that's good.
If they put
2 million, he's saying
No,
2
how
million.
long the
4
money has
months,
been?
4 months, 6 months.
4 months, okay?
What nationality is
The nationality of the person or the money.
the money, the nationality Iranian.
But what,
I know that if they're not Iranian, is.
No, it depends on where the source of the money. They want to know
Yes.
where is the source of the money,
That's
not the
right.
nationality of the
Okay,
person.
the money for 4
If
months are here
If
from
it's a
the
European,
Europe.
they can prove coming from a European bank, then they're looking at other categories as well.
Yeah.
If it's only one person, then again, another category. 2%, there's.
so,
she knows
so,
better than I do.
okay, so something like that, like $2 million, 32 years old, they're gonna do due diligence, they're gonna wanna know, how does he have $2 million, where did the money
It's
come
come from
from?
European, England,
Yeah.
it's but it should be, what's
Yeah.
the source?
They always wanna know the
Source of
source,
money.
even like your down payment. So let's say, for instance, your client is giving $50,000 in down payment. Anything over 5,000 in deposits, I need to know where that 5,000 came from.
5,000 cash, you are right. But with the bank draft, it's not 5,000. Bank draft is 40,000.
No, what I'm saying is,
Like,
when you provide down payment documents, I need 90-day statements. Within those 90 days, if I see large deposits of 5,000 and up and it's not a payroll,
Yeah.
I have to know where that source was, and I have to provide proof to the lender where that money came from.
If it is 4 months ago.
Yeah, it doesn't matter.
If it shows
So
up-
as long as, when you give me 90-day statements, in those 90-day statements, if you, let's say you have 4 large deposits, anything over $5,000, I need to know where those 4 large deposits came from. I need the source, I need to know where they come from. So I need,
He says he has the source from England.
They have that source.
yeah, that's all, I'm just saying I need the
Yeah.
source, that's it. Because they're gonna wanna know why, where, what, how,
So they'll probably want 3 months on that account
yeah.
as well to
Yeah.
see. And if it came from
And
somewhere else, 3 months
35%
on
What is
that
a
account.
newcomer to come, maybe they come for
No,
2 months.
newcomer said 5%.
The
She said
newcomer's
5%.
different, the
Yeah.
new, the,
5% less than $5,000.
Yeah. the New to Canada, under the New to Canada program, if you qualify under the New to Canada program and you meet the criteria of the New to Canada program, they don't scrutinize it like that. It's depending on the program that you're under. But some don't qualify for the New to Canada program. So New to Canada program, you don't have to have credit. Like, we know you don't have credit, you're new to Canada, you can't possibly have credit, right? But that's okay. You can still get a mortgage with 5% down.
Up to how much?
Well, you have to qualify, whatever they have to have some sort of job. So
In Bangkok.
here in Canada,
Here.
so let's say they just
2
moved
months, they don't
here.
have any sort of job 2 months. Of course.
No. What's just, I think what you are trying to say is that you can provide the down payment. And obviously, when you're settling in Canada, you're going to look for a job, you're just settling. Instead of paying, that's kind of a facility for you to have a house or condominium until you start to work, you start to make the payment, pay stubs and all that. That's how.
So when you're new to Canada, most of the time, people that are moving from different areas,
Practically, it's not.
they already have a job, they already have an offer, whether, some of them, a lot of them are accountants, a lot of them, they work for KPMG or Deloitte or whatever, right? So we get a job letter for that, they work in a factory or whatever, we need a job letter, we need to show that they're making, they can still service the mortgage, but we don't look at credit, we don't look at, because they don't have credit, they're new to Canada, so they won't have any credit to show, right?
What they can't get it in 1 week.
What if?
They can't get it in a week. Credit visa from the bank.
No, the credit report they can get, they're all 800. The credit report is good. It's the job letter.
What she said doesn't need job letter.
No.
The 2 months they don't have a job letter, they take time to get a job, they find a good job that they can't pay the mortgage.
I know, okay, so the new to Canada, okay, I will send you the details of the new to Canada criteria. They still need to meet the criteria under the new to Canada program. Yes, you can buy with 5% down, you don't look at credit, you don't need to have credit, but there's still a criteria that they need to meet. They still have
Job,
to.
it is one of them.
Job is one of them. You have
In
to have a
Canada.
job.
Yes.
Yeah.
Make a job.
How would
Buy
you
one
service
service
mortgage, right?
You know, a lot of people come from Iran, they have a job over there, they have a hospital, they have factory, they have a lot of things, and he's running when they come here. You cannot prove that income.
No. It used to be in the
But
past.
how did a lot of, I know that a lot of Iranians, they can't get a 2 million, 3 million to buy the house and get a mortgage. How they do it?
They can't or they can?
They can't, they need it.
Well, there's many ways to just get cut, I guess.
Jungle out there.
Yeah, I'm giving you the,
The 5% is just 5%. Now, we have a builder on 6, they say we have 1%, go to the kitchen. When you go over there, the 1% is for 7%.
We'll send you the criteria. Yeah.
So you have to.
I said now 5.
Yes, Bill.
Yeah?
Yeah, the builders, not the youngest.
And then
Yes,
any
okay.
questions?
They put on,
Give us a call.
they can get with a 1% rate mortgage, good credit rate. But when you go to ask them, it is 1%, it is 7%. You know, just become 1%.
Oh, you're welcome. Please grab some lunch.
Yeah.
The thing I've learned from this is before you take any
Yeah, you don't wanna waste your time. And then I won't, I won't say, because I have a conversation with them right now, and I'll know where they're benchmarking. They're looking to buy
If you
houses,
would like to
they're
leave your
looking to buy.
card, we can
And
send
some
you
are just
any
really
particular information.
shopping
If you
right
like
right now.
specific.
I don't see
It's perfect.
for sure, so low, or they have no savings or at least you know where to
Here.
your
Time
your
and what
energy
you're
right.
interested in, and then we'll send you that particular.
someone I know
Okay.
how this
Okay.
do before we start looking around.
Oh, good.
I honestly, like, I know that people say, yeah, but they said that they went to their bank and they got approved, but. Did they?
So
Or they wish. Thank you, it was very nice meeting you.
Thank you for your time.
Oh, no problem, thank you.
2 questions. First of all, I had a very typical client who is looking on and he find a job in Alice.
Okay, yeah.
But less than found, and he's a very serious potential. Because he's a very picky, he had some experience, some ones also from the bank, and I don't know why, and they also leave, and now he's in the first, the processing of hearing, and I want to send him to.
That's about how are you?
Send us an email, you have the card in here? Yes. Send everything an email. And then. Okay, and then we'll let you know. Okay? Okay, no problem.
But I do.
Yeah.
He was going very direct to buy a commercial property, very easy. Was the source and nobody knew that.
It's a different type of lending. They still ask for Listen, the minute that the banks told us
I told you maybe yesterday, they say anything incorrect. Stop, you want to give me those stuff.
And you know, the problem is. Like, you know, like, and then I. Okay, thank you.
Oh, sure. Okay.
Yeah.
Right, it's like, really?
Yeah, it's just a huge money and the. Thank you.
Yeah, thank you.
So your team, this was so cool. I myself to the,
Yeah, that's where our intersection. Yeah. Is it? Okay, so we're romanticizing on Broad? Yeah. Right now,
yeah. Well, this one's mine, but all of these are.
Yeah, we're right there when we pass the first set of lights and stuff. We're like, yeah.
The only thing that I said all the time that I
We're more than happy to
have
find
good
like
soft copy to
we need
select.
to.
So they kind of felt bad, they didn't really give us a copy. And then
So had it been a question or whatever, I would have, we actually answered my anything at all. And even when we, we babysit them if they need like 1,000%, like if they, we try to educate them. So
Yeah, we'll probably do a lot
Mary Grace will specialize in a lot of emotional as well. Yeah. So, they like to educate the client, right? Yeah. And they're gonna go through the whole process over and over and go, if there is benefit.
Yep, everything is all done. You know.
Anything at all? Yeah, give us a call, come back and help you.
Yeah.
Thank you.
Yeah, no, thank you.
She lives close to our office. Oh,
My office is, oh, the one down your.